What's your prediction for the housing market this spring? By Mike and Tammy Simpson. Washington State's housing markets in 2025. This question was recently posed on a social media platform, and we know from experience that this inquiry will become increasingly common after the new year, so we've decided to address it proactively. November 2001 to 2024, new listings and active listing indexes. Using data on single-family residences and median prices in King County, November 2024 recorded the lowest number of new listings since at least 2001, the earliest year for which we have complete data. This may represent an all-time low. From 2001 to 2023, the latest data we have on King County's population indicates that it grew significantly, increasing from nearly 1.8 million in 2001 to about 2.3 million in 2023. A growth of roughly 500,000 people, or almost 30%. Potential buyers are increasingly being priced out of the market, as evidenced by the lowest number of new listings for any November since 2001, contrasted with the fifth lowest level of active listings over the same period. Only 2017, 2020, 2021, and 2023 recorded fewer active listings. This disparity highlights how rising median prices and relatively high mortgage rates, even with recent rate cuts, are straining affordability, potentially setting the stage for future shifts in market dynamics in select areas. Interest rates and projections through December 2025. The CME Group's FedWatch tool accurately predicted the quarter-point rate cut on December 18th, which was confirmed. Projections have indicated for weeks 2 additional quarter-point cuts in 2025, as supported by Chairman Powell Wednesday, December the 18th. Despite this being widely anticipated, stock markets reacted unexpectedly, plummeting last week, an outcome that caught us off guard, as we'd foreseen both the cut and Powell's likely guidance for weeks based on interest rate trading. Since September 2024, the Federal Reserve has implemented a full 1% in rate cuts now. Whether another 50 basis points will significantly influence the housing market remains uncertain. Mortgage rate forecast for 2025. Industry predictions for 30-year fixed-rate mortgage rates by the end of 2025 vary as of this writing. The Mortgage Bankers Association rates are expected to range between 6.4 and 6.6%, stabilizing around 6.3% in 2026. Fannie Mae forecast a rate of approximately 6.2% by the fourth quarter of 2025. Realtor.com anticipates an average rate of 6.3% in 2025, ending at 6.2%. HousingWire predicts rates will fluctuate between 5.75 and 7.25% throughout 2025. Current market dynamics. From October through March, median price data from 2001 through 2024 consistently reveals a best buy window for buyers, with January, February, November, December, March, and October in that order ranking as the top months to secure the best deals. Despite this, buyers tend to be most active during the months when prices peak, driven by a fear of missing out known as FOMO. Informed buyers and investors who understand these seasonal patterns could save a significant amount of money by timing their purchases strategically. Unfortunately, many agents are only vaguely aware of seasonality's impact and are unable to cite the data with precision. While agents may acknowledge that seasonal trends exist, few grasp the deeper nuances and have the access to the detailed historical insights we provide. This highlights the importance of leveraging data-driven strategies to navigate the market effectively and capitalize on overlooked opportunities. To illustrate, the chart below shows average monthly median prices from 2001 to 2024. While a simplified view, it effectively captures seasonal trends by smoothing out anomalies such as market crashes or spikes. Further analyses such as inflation adjustments, weighted averages, and standard deviation assessments could provide additional depth, although these discussions are often overly technical for casual viewers. Yogi Berra famously quipped, "It's tough to make predictions, especially about the future." This humorous yet insightful statement underscores the inherent uncertainty in forecasting, a challenge that's especially relevant in fields like real estate and economics. It reflects Berra's knack for delivering wisdom wrapped in wit. I wonder how Yogi would answer the question, "Where do you think prices will be next spring?" I could envision him simply asking, "Where?" For example, Boeing is laying off almost 2,200 employees across its Washington state facilities with job reductions as follows. Everett, 1,160. Renton, 339. Seattle, 235. Tukwila, 148. And Auburn, another 136. This is part of a larger plan to reduce its global workforce by 10%, driven by $6 billion in losses reported during the third quarter of 2024. The affected positions are predominantly high-paying roles, including engineers, analysts, managers, administrative professionals, and recruiters. These positions typically require advanced education, specialized training, and significant expertise, resulting in median salaries that often exceed six figures. In areas where the highest number of layoffs have or are going to occur in December and January, we might see some softening in certain price points if these individuals find employment in other states or if they need to sell. Washington's housing challenges. Are permits or developers the problem? Washington faces a housing crisis, needing 1 million new homes over 20 years. While Governor Inslee's 2023 reforms, including House Bill 1110, address zoning restrictions by legalizing duplexes and fourplexes in single-family zones, other significant barriers remain. Number 1, regulatory hurdles. Developers still face protracted approval processes due to strict environmental and land use regulations. High costs. Impact fees and compliance costs continue to discourage projects, especially affordable housing. Number 2, developer hesitancy. Profit challenges. Rising construction costs, labor shortages, and slim margins deter investments. Market risks. Economic uncertainty, fluctuating interest rates, and tenant-friendly laws create an unattractive business climate. Inslee's zoning reforms are a step forward, but without streamlined permits, reduced fees, and further incentives, developers may remain reluctant to build. A comprehensive strategy is essential to meet demand and avoid falling short by 165,000 homes. I'm a managing real estate broker and certified residential appraiser with 35 years of experience, and Tammy brings an additional 27 years of experience herself. With our models and algorithms, we can answer the question quite emphatically of where we think prices will be next spring. But we need some questions answered first, beginning with where are we talking about? Because the answer isn't going to be the same everywhere, always, all at once. If the past is prologued, act before the crowd. Our research shows October through March is the best time to buy a home in the Pacific Northwest, with less competition and motivated sellers. But don't wait. By March, buyer demand surges as spring arrives and competition heats up. To help you win in this shifting market, we've created a strategic buyer's guide, Winning at the Home Buying Game. Based on our decades of experience, it's concise, packed with tips, and designed to give you an edge. The window is closing fast. Don't miss your opportunity to secure your dream home. This concludes our forecast for spring of 2025. If the trend of diminishing new listings persists and active inventory remains at historically low levels, the past suggests that multiple offer scenarios may reemerge as demand strengthens in the spring market. Although the Federal Reserve has implemented a 1% reduction in the federal funds rate, interest rates remain relatively high, with most experts projecting mortgage rates to stay above 6.2 to 6.3% through the end of 2025. A low-supply, high-demand environment traditionally leads to upward pressure on prices. Tammy and I sincerely thank you for your continued support and extend our best wishes for a prosperous and healthy 2025.